Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Today, the main topic of this video is going to be inflation. And is it over? And that's what we're going to be looking at in this video predominantly. We know why the markets sold off, because we had high inflation. And of course, the markets had to readjust their allocations based on what the Fed were going to do and other central banks with monetary policy. You know, they were going to essentially take us from a very generous isn't the right word, but very accommodating environment into a very restrictive one. And we've shown you this a million and one times in regards to, for example, let's just very quickly pull up the Fed funds rate. And let's add Bitcoin on top of it. You could add, or we can just do the S&P because it's the same thing. All markets sold off in preempt of what the Federal Reserve were essentially looking to do, and other central banks, which was increase the amount of dollars needed to pay off the colossal amount of debt that's out there, which means there's a repricing goes on into markets. And they're doing this all to fight inflation. So there's lots of things going on right now, but I really want to focus on this one topic. We can do a little bit of TA on Bitcoin, although we are doing daily technical updates for Bitcoin, where we're literally, this is what we drew yesterday. We've called 6 days of this year, or I should actually say 5, because we started on Tuesday, pretty perfectly in terms of what way we thought the market was going. But we will do a daily Bitcoin update where we'll look at Bitcoin technically. But like I say, this video is really talking about inflation. Now, I had a meeting with my patrons where we discussed some really interesting things. And one thing that we looked at was inflation, and the fact that, you know, if we look at some of our resources, let's use oil as an example. Oil is back at almost pre-war levels. Something like wheat is at pre-war levels. Well, not quite at pre-war levels, but pretty damn close. In fact, yeah, back at pre-war levels. Natural gas is at pre-war levels. And we've seen a continuous decline in the CPI over the last little while. We are also seeing, and we had some news this morning from the European Union, and that was in regards to inflation. Eurozone inflation rate slides to 9.2 as energy price surge cools down. The expectations for this, I think, was 9.7, something along those lines. And this is obviously down from 10.1. So we are seeing inflation cooling down. This is going to steer the Fed. The Fed do have a 2% inflation target. BlackRock essentially have said, and we've looked at all this, that it's going to take a 2% drop in GDP. We're potentially starting to see that. But markets are forward looking, and this is what you have to realize. Now, in my opinion, the worst is behind us in regards to the cryptocurrency market. Maybe there's certain sectors of the equity market that still have further downside to go. Housing market maybe is only just starting to get affected and may see some more significant downside. But in terms of the cryptocurrency market, I don't think we're going to see another 70% sell-off for Bitcoin. Put it that way. Maybe it goes down another, and we do have targets lower for Bitcoin. Maybe it goes down another. Perhaps, you know, maybe it goes down another 20%, maybe it goes down another 30%. But what I'm saying is I think the worst is behind us for Bitcoin and for altcoins. And we are seeing, you know, this is remember I told you guys yesterday to go and follow Gavin. He obviously spends all his time on Bloomberg Telegraph, or Terminal, sorry. And this is Fed's bullet inflation likely to ease slower than markets expect. This was from the Great Bear. The Big Short, Michael Burry. Inflation peaked, but it is not the last peak of this cycle. We likely see a CPI lower, possibly negative in the second half of 2023, and the US in a recession by any definition. Fed will cut and governments will stimulate, and we will have another inflation spike. It's not hard. So yeah, this is the kind of Peter Schiff actually times in here and says unlikely to reach 2%. I think it's unlikely to reach 2% because, yes, we're seeing inflation in certain areas, but we're seeing an elevated inflation in others and a persistently higher inflation in others. So as a basket of CPI, we're seeing that lowering, but in certain areas, it's staying a little bit more sticky. So in my opinion, I think the time to be a grizzly bear, even though we expect lower prices, we're not as bearish as we once were. Okay, we're not like everybody on Twitter and YouTube right now that has literally waited until Bitcoin's 72% down to flip bearish. We've been on this trend and we've been following it like a hound the whole way down, keeping hopefully you guys, certainly my Patreon members, out of the market, ready to look for that opportunity to redeploy. And I still do think that there's a Lehman's moment, March 2020 moments crash around the corner. That, in my opinion, is quite obvious. Because this is what the yield curve essentially is predicting, and you can see it's coming back down now. We've got bond yields that are continuing to climb. You know, the dollar is actually reasserting. This is something that we drew this falling wedge, and we said, look, you're going to pop out the top of this. This has played out. Look at it against the Great British Pound. We've drawn all this. We've given you all this technical, guys. You don't get analysis like this pretty much anywhere else on YouTube. All you get is people acting like they know what TA is and drawing trend lines and nonsense, basically. That the thing is with TA is, why are you doing it? Well, you should be doing TA to make money, right? And to get things right. The people that are doing TA, I've not seen any trades. I've not seen anything that they've done. In fact, largely the calls that they've made have been majority wrong all of last year. The only time they were right, and we were all right, was the bull market when things just went up. Pay attention to who did what last year. The best trade we did was get out the markets last year in I think March the 21st, when Bitcoin was around about 44k. That was a great trade. And this year we're saying we're not as bearish as we were. Still think, yeah, there's definite room for downside. But I don't think you want to be as bearish as potentially you were last year. I think that's kind of very sheeple, very sort of herd mentality minded at the moment. People are all expecting these lower prices when the very thing that's caused these lower prices, which is inflation and what the Fed have had to do, is now coming down and potentially has peaked. You know, I don't think we're going to see the elevated levels of inflation that we have seen. They may come back around if something happens and they have to print again. But as of right now, I don't think we're going to see those elevated levels of inflation like we previously. I think this year, certainly coming out of winter when the demand for things like gas, oil, you know, is significantly lower, it makes sense to think that inflation is going to ease, thus maybe a more dovish Fed, even though they've been very hawkish. They have to continue to be hawkish until they don't, okay, if that makes sense. So the stock market's still getting smashed. I think that there's more reason to be bearish on the stock market, you know, and at least coming back down to before they printed all this money. Then there is the cryptocurrency markets. Cryptocurrency markets are higher beta. It's almost a lot of it's already down at these sort of levels. But this is, to make this very clear, we're not calling a bottom here. We're not saying we're bullish here. We're just saying don't be as bearish as you once was and what Twitter is promoting. And certainly when you have Michael Burry, the big short, come out and say, look, inflation's peaked, maybe pay attention. We've got the non-farm payroll. Today actually, which is job growth expected to have cooled in December, but not enough to slow the Fed down. So we spoke about this generally, the unemployment rate and the correlation with the stock market, which I actually won't go over here. But for me, I'm really excited to see how things play out. And you know, we've been calling the markets from a day trading point of view, looking at daily movements, ranging, chopping it up. We called this the whole way up, by the way, guys. We called all these targets. We're calling actually for a higher target of up here, to be quite honest with you. Round about 17,200. Maybe we get a rejection that comes back down. I'd like that. You know, I ultimately would love lower prices, and I do think we will get them. But I think now you have to play a bit more of a smart game than just following a macro bear trend in regards to being an investor. That is really all that I have for you in this video. I don't really have much more to go over. It was just talking about inflation, kind of giving you guys a benchmark. That's what these daily markets are. They're cross-market analysis that helps you guys as investors, as traders, maybe get a bit of come together and get to grips with this market, what it's doing. Because when I first started in the crypto space, I wish I would have had somebody like me that I could have listened to. The majority of people on YouTube, guys, and Twitter, and I've seen this behind the veil. I've seen and met some of these people that have these big accounts and these big YouTube followings. I wouldn't trust them to organize a children's party. I wouldn't trust them to go and get shopping for me, let alone, you know, give me financial education and talk about investing in the crypto space and so on and so forth. all I've got for you in this video, guys. You enjoyed the content, like us, appreciate it, so as a comment, and I'll see you all in the next YouTube video. Thanks a lot for watching, ladies and gents.